Good morning and welcome to the final earnings season special of the week, and it's a look at Amazon today. In case you missed it last night, they posted very strong earnings for the final quarter of the year, and shares were up as much as 10% in after hours trading. So we're expecting a gap higher on the open as a result. You see the chart behind me. It was testing its 50-week moving average there, but I think we're popping up some way north of that region now. So Amazon climbing back up, having had, as you can see here, it's been making some lower highs throughout the last year. It's struggled versus some of its sort of peers among the FANG stocks. So whilst we've seen the likes of Facebook and Microsoft and Alphabet, among others, posting these sort of record highs, and Apple, of course, being the exceptional one among them, Amazon has struggled, but the fourth quarter has been a lot better. The expansion of its one-day delivery service in the US, in particular, boosting Prime numbers, and critically, of course, one of the key reasons that the market has been a bit uncertain about Amazon is the cost of this one-day delivery service. So they spent £4 billion to invest in this one-day service in the last quarter, $4 billion, sorry, but it's not as much as expected. So this is a key thing. They're getting to that level of Prime subscriber growth and membership revenue streams, and getting the one-day service without some of the costs that we thought maybe were coming. So Amazon net income in the last 3 months rose to $3.3 billion on revenues of $87.4 billion. 10% year-on-year rise, signal that investment in getting faster delivery did not hit profits as much as feared, as I said. So analysts had been expecting net income at $1.97 billion, so significant beat there. Record numbers joining the Prime service. That's $129 a year in the US. I think in the UK it's around about 70 or £80, so sort of roughly equivalent. They have a total global membership of 150 million people, and I think there's definitely still room for that to grow over the next 5 to 10 years. The cost of ramping up its delivery service would be about $1.5 billion in the quarter, but it came in under that level. I think, also look at AWS, Amazon Web Services. The revenues there up 34% to $10 billion, and it contributed a vast amount of the actual net profit. It contributed 2.6 billion of the 3.9 billion of operating income that Amazon recorded in that quarter. So we're seeing, although sales growth at AWS is slowing, 34% is still very strong, but it's slower than it has been. Margins are also a bit weaker, but nonetheless it's still a knockout kind of number that you're looking at there. And that 4 billion cost of investing in shipping services over the last year, as I mentioned, is sort of offset by AWS profits. So total revenues were up 21%, earnings per share $6.47 versus a consensus of $3.96. So whopping great earnings beat. Nothing, no one thing that stands out for Amazon there, just lots of very, very good numbers, and it continues to be the key marketplace for sellers in the West. So Amazon doing very well. Shares going to rally on the open, but broadly the broader market is softer. We've got the Dow looking to open about 160 points lower today. Worries about coronavirus doing the rounds again, and that's weighing on sentiment in Europe and US futures. So that's it for the moment. We'll be back for our walk on Wall Street later. Thanks for watching.